please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking for you this Wednesday.
The normal monsoon, the smooth rollout of the GST, the inflation excluding food and fuel coming down. We thought that this was an opportune time.
For the first time in 10 months, Monetary Policy Committee cuts key policy rates by 25 basis points to the lowest level in over 6 years, but also warns that inflation could accelerate from current levels.
Given the liquidity conditions prevailing and that we have reduced policy rates by a substantial amount since the easing cycle started, I think there is scope for banks to reduce lending.
Governor nudges banks to make loans cheaper, says there is scope to reduce lending rates. No fireworks in the last street as the bulls had factored in a 25 basis point cut. Sensex and Nifty end with marginal losses. ITC and HDFC drag while Reliance lend support. The rupee zooms past the 64 mark to hit a 2-year high against US dollar. Experts say inflows of over $30 billion this month, low inflation and falling current account deficit are the key contributors to the move. The CAG or the CAG pulled up Mangalore Refinery and Petrochemicals Limited, says frequent revision of its capital projects plan has increased costs by more than 2,500 crore rupees due to delay in project completion. That's an exclusive. In earnings, Punjab National Bank shows a fall in slippages, but contraction in loan growth is a disappointment. Lupin falters as revenue falls 13%. Patanjali set to enter the apparels business early next year, explore self-manufacturing and also tie-ups with other textile mills. That's an exclusive. Apple hits all-time highs on strong earnings thanks to robust iPhone sales. CEO Tim Cook says he is very bullish on India and expects it to be the next China for the company. Well, let's get straight to the top story this evening. The Monetary Policy Committee has cut key policy rates for the first time in 10 months. This is also the second rate cut by the committee, which came into being in October last year. Repo rate and the reverse repo rate have been cut by 25 basis points. Now, repo rate is at its lowest level in over 6 years. This is bang in line with what the street had been expecting. The RBI also maintained its neutral policy stance. So, RBI governor said that a normal monsoon and a smooth rollout of GST and the fall in inflation gave them the confidence to actually go ahead and cut rates. However, Urjit Patel did raise a red flag and did point out a few risks. He expects inflation to accelerate to current levels and maintained the 4% year-end target. He warned that farm loan waivers could threaten the inflation trajectory and the fiscal deficit. The committee maintained its growth forecast at 7.3%. On the excess liquidity in the system after demonetization, RBI has said that it has asked the government for more tools to suck out the cash in the system. Here are the highlights from the monetary policy.
The normal monsoon, the smooth rollout of the GST, the inflation excluding food and fuel coming down. We thought that this was an opportune time to do a 25 basis point cut. While our statement acknowledges that from the current lows, inflation is likely to rise, it is going to be about 4% by Q4. Given the liquidity conditions prevailing and that we have reduced policy rates by a substantial amount since the easing cycle started, I think there is scope for banks to reduce lending for those segments that so far they have not yet benefited to the full extent of our policy rate cuts.
We have been mopping up a lot of liquidity on 7, 14-day and 28-day variable rate reverse repos. We've also started conducting open market operations at a fairly, I would say, gradual pace of reasonable amounts. Our intent is not to actually destabilize or shock the markets in any way. We will continue watching the currency in circulation numbers closely to get a sense of whether we are at now the right level. And if yes, that will give us a sense of assuming reasonable growth numbers where we might currency demand to be in, say, 6 months, 9 months or 12 months time, and that will lead to our calibration of the liquidity.
Okay, let's take this discussion further. Lata Venkatesh joins in now through the fine print of the Monetary Policy Panel's decision. Lata, what are the key takeaways?
Well, the only big key takeaway is that on expected lines, there was a 25 basis rate cut, and that's already priced in. So for the market, it's not just a neutral tone policy, it's also a non-event policy. As to the future, no hints were given as to whether there is more space. So markets will have to watch how the inflation numbers come. If they come way below the Reserve Bank's forecast, then perhaps space opens up to expect another cut. Third, the Reserve Bank, and this is a positive, didn't sound in any undue haste to mop up liquidity. So the liquidity policy will remain more or less the way it is, which means monetary conditions will be as easy as they are now. Debentures and cheapies will rule probably at the same yields as they are now, or maybe go down by 5 or 10 basis points. Not much change. Fourth, the market could have done with some comment from the Reserve Bank on either stock market exuberance or bond market credit quality, but that was not to be.
Okay, Lata, thanks for joining in with that. Here's what industry leaders and experts have made of the RBI's rate decision.
I think it's not a surprise. It was expected. The inflation numbers have come down. The food prices, barring 1 or 2 items, are lower. And even tomatoes and onions are very short term. And I agree with the stance Reserve Bank has taken that the GST implementation was not as bad as we all expected. It was fairly smooth compared to what was expected. Yeah, so I think it's a good boost to the economy, and I think it was expected, and the MPC have taken the right decision.
Every indicator is clear. Inflation is down consistently. There is no fear of inflation jumping up unexpectedly over a short period of time. And we have slowed down on the overall industrial growth. We've actually shrunk. The growth itself has shrunk over a period of time. And it is clear that lending is down. So that every indicator was clear that it deserved, frankly, deserved a higher cut than we got. 25 basis points is welcome, but 50 basis point is what was quite justified right now.
No surprises, really. I think exactly what people expected, that, as I mentioned earlier, the focus is largely exclusively on inflation. The MPC is going to be data dependent. Nobody really knows how much of the disinflation is cyclical versus structural. We just need a little more data. I'll make one other quick point. I think we should learn to separate liquidity management from the rate structure, just like the Fed is doing in the US.
All right, let's get you the equity market action of the day. The rate cut failed to impress the street as a 25 basis point cut was already factored in. The Nifty and the Sensex fell 0.3% and closed at the low point of the day. The bank stocks mirrored the benchmark indices as they were the key drivers today. The mid-caps fared better and closed flat with a positive bias. Anuj Singhal is here to decode the day's trading action further for us. Anuj, the market really wasn't as enthused as you would have hoped with the MPC decision.
Well, interesting day. The market actually ended at the low point today, and that is after good news of rate cut. Normally, at times like these, you believe that was this a bit of a near-term top? Of course, we'll find out. Market breadth continues to remain weak. That's been the problem. In terms of stocks that lost ground today, Indiabulls Housing Finance and some of the high flyers like Infosys, Tata Motors, they were down today. Other nifty losers included names like Sun Pharma, ONGC, Larsen & Toubro. But on the gaining side also, you had some names like NTPC, Ambuja Cement and Reliance, which held one end up for the market. And in terms of stocks outside the index, high beta corrected today, led by the JP Twins and, of course, Reliance Communications. So what next? Look, you just get a bit of an eerie feeling that today could have been a near-term, and I repeat the phrase near-term, top for the market, because the market ended at low point after good news. And the market's texture of buying the dips will be tested. Today's high will now become an important reference point as we move forward.
All right, Anuj, thanks for joining in with that. Now from Dalal Street to Mint Street, it was a good day for the Indian currency as it hit a 2-year high. The rupee breached the 64 per dollar mark, comfortably and is currently trading at 63.7 to the dollar. Heavy inflows across the board, as you can see. Let's take a short break on that note. Up next, CAG pulls up Mangalore Refinery and Petrochemicals Limited. Why? We will get you exclusive details after the break. Welcome back. The Comptroller and Auditor General of India, government's top auditor, has pulled up Mangalore Refinery and Petrochemicals Limited for frequenting revising their capital projects plan. Now this, the CAG alleges, has resulted in cost overruns as well as project timelines getting delayed. Rashpreet Sethi broke that story earlier and she's here with the details. Appreciate what else has the CAG highlighted here?
Well, if you see, the CAG report is quite negative for the company MRPL. In fact, what the findings reveal are some stark numbers as far as losses and funds sitting idle with MRPL is concerned. Now, remember, the CAG had taken up this audit and has given this report after there were issues as far as implementation of their project or phase 3 of MRPL's project is concerned. Now, what are the CAG findings? They are saying that the company frequently revised capital projects plan and resulted in time overrun of over 2 years. In fact, the CAG also says that there has been a loss of about 2,509 crore rupees during MRPL's planning stage because the capital projects costs were escalated. It has also gone ahead and said that MRPL did not use the ECB loan that was granted to them, which has also led to some funds lying idle as far as implementing of the phase 3 project is concerned. Now let's go through the recommendations that it has given, that MRPL should draw up a comprehensive plan to ensure that finalizing projects is done in a timely manner. In fact, the CAG reports also points out as to how there's a massive gap as far as implementation, planning and execution of projects and even processing units are concerned. For MRPL, they've also gone ahead and said that they need to ensure timely completion of utilities like power plants, and let me quote here, otherwise it will have cascading effect on commissioning of other units, end quote. So they've also asked MRPL to ensure that they make use of the funds and they do not lie idle. We'll have to wait and see whether another report is likely or not, but for now, quite a setback coming from CAG for the company.
No, absolutely. Thanks, Rashpreet, for joining in with that. A couple of other important court actions today. So let's shift focus to the battle against bad debt. In yet another setback for debt-laden steel giant SR Steel, the National Company Law Tribunal has admitted SBI's plea to start insolvency proceedings against the company. Now, the tribunal has appointed SBI-nominated Satish Kumar Gupta of Alvarez and Marshall India as the interim resolution professional for the case. Remember, SR Steel is one of the 12 firms referred by the RBI for insolvency proceedings. The steel manufacturer had challenged the central bank's decision in Gujarat High Court. However, its plea had been rejected. On to an exclusive. Some relief for debt-laden Reliance Communications. Sources say that the firm's Indian lenders have given their consent for the admission of the Aircel as well as the Brookfield deal cases in the National Company Law Tribunal. In fact, Reliance Communications' Chinese lenders, one of them at least, have given their consent for the case. That is CDB, Chinese Development Bank. Earlier, China Development Bank had objected to Reliance Communications' proposal to merge its wireless business with Aircel. But now sources say that if the NCLT admits Reliance Communications' petition, then the Andalamani controlled firm will look to seal both the deals by the end of next month. And remember, the airline telecom company needs to complete these transactions within the next 7-month breather it has gotten from its lenders. The deals will help the company repay a majority of its loan and reduce debt by almost 60%. On to earnings corner now. Pharma firm Rupee has traded in the green today despite missing street estimates on the earnings front. So first quarter consolidated revenue dropped almost 13% compared to the same quarter last fiscal and was lower than the street estimates. Lupin's profit also tumbled by a whopping 60%, missing the street view by a significant margin. Sharp decline in profit was also on the count of higher than anticipated price erosion. The firm also reported a decline of over 40% in its operating margins. In the banking space then, public sector lender Punjab National Bank reported a mixed set of numbers for the first quarter. PNB's net interest income came in at over 3,850 crore rupees, better than what was expected. Net profit at over 340 crore rupees was almost in line with street view. However, the bank's loan growth remained fairly subdued compared to the corresponding period last year. Declining asset quality also remained a cause for concern for the bank. During the first quarter, PNB's gross NPA rose to around 13.7% and net NPA was up at around 8.7%. Let's take another very quick break on that note. Up next, Patanjali is set to enter the apparels business early next year. Exclusive details on the disruptors' new plans when we return. Flash in the retail space with Swadeshi toothpaste, shampoo, soap, noodles among others. Baba Ramdev has now turned its focus on Swadeshi jeans, and not just Swadeshi jeans. If all goes well, they may be up for a sale at a retail store near you this spring. And it's not just jeans. CNBC TV18 learns that Patanjali is set to enter the apparel business across 4 categories. Priya Sheth has exclusive details. Priya, we know about Swadeshi jeans. So which other categories is Patanjali looking to foray into now, and how is this going to change the entire business?
Well, absolutely. Patanjali Ayurved is gearing up for a mega launch in the apparel space, and this, we understand, is likely to take place in February or March 2018. That's the internal timeline that Patanjali Ayurved is working with. Now, they're looking at apparels across categories for men, women, as well as children. Now, as far as specific categories are concerned, they're looking at knitwear, woven wear, denims, as well as ethnic wear. And for this foray, Patanjali Ayurved, we understand, has really formulated 3 teams to really take this apparel foray to the markets. One is the marketing team, the merchandising team, as well as the designing team. Now, and these teams will be formulating plans to cater to different outsourcing zones. Now, as far as manufacturing is concerned, the company is exploring options of in-house manufacturing, as well as joint ventures or tie-ups with other textile mills and other knitwear as well as denim manufacturers. But on the retail front, the company is likely to sell the products through their own company-owned stores or through the franchisee model. So we'll have to really wait and watch as to how this pans out. But we did write to Patanjali Ayurved, and the company has confirmed that they will be making an apparel foray in summer 2018.
Okay, Priya, thanks for joining in. That will completely change the game for players like Future Group, Shoppers Stop, Arvind, and Aditya Birla Retail. Let's move on. In global earnings, Apple hit all-time highs on strong earnings thanks to robust iPhone sales. The Cupertino-based tech giant managed to beat all expectations. The firm's CEO, Tim Cook, also said that he is very bullish on India and expects it to be the next China for the company. Here's a special report on the fine print of Apple's earnings.
Shares in Apple topped record highs after hours following a strong third-quarter earnings report. The California company saw its net income rise compared to the previous year, while revenues beat estimates. Better than expected iPhone performance helped Apple's results, with sales rising 1.6% to just over 41 million units. But lower average selling prices caused revenues from the device to miss estimates. Now, despite Apple's solid third-quarter earnings, not all remain sold on the stock. Speaking on CNBC earlier, 2 market participants took very different views on the Cupertino company. Take a listen.
Ultimately, the question is, are people going to pay $1,100 for a new phone, or are they not? And is this the new iPhone super cycle, or is it not? And if it's not, which I think so, then, you know, ultimately we'll have to wait and see.
So we like Apple here. We were recommending it about a year ago, under 100. We liked it a lot more there because it was real cheap. Now it's getting to fairly valued, but we think it's fairly valued with momentum and with good earnings growth from here. So we think the stock still should have some pretty good upside.
Our technology correspondent Arjun Karpal joins me now to weigh in on that discussion. What do you think? Do you think a whole host of consumers will pay $1,100 for a new phone?
Yeah, well, there seems to be a lot of pent-up demand for a new iPhone at the moment. A few consumer surveys that have come out over the past 24 hours have suggested the demand is very strong for the iPhone 8 or iPhone X, whatever they're going to name it. But this is really a very different device, if we're to believe the leaks, from what Apple's put out in the past. There was a sense that with the iPhone 7 and the iPhone 6S that they weren't radically different devices. You know, there were people upgrading to them, great. But actually, this is a complete overhaul of the iPhone, a new screen technology, new sensors under the hood, and that's something that could really appeal to consumers looking to upgrade.